What's going on, everyone? I want to talk about FEPI today. I do want to compare it to some other funds that are similar because when the market corrects, not if, when the market corrects, I will personally be looking to get into what I would consider safer cover call funds so I can catch some share price appreciation. So when the market corrects, these will all go down. I will start purchasing them. And then when the inevitable happens and the market starts going back up, I will be able to catch share price appreciation in addition to dividends. So FEPI is one I've talked about or thought about rather. And I want to see, do you guys like it? If you're holding FEPI, have you thought about it? What's your thoughts on it for people that have held it? And I'm just going to tell you what I'm looking at and what I'm seeing. So, when I compare FEPI, which we're going to do to YMAG, JEPQ, and QDTE, they're all a little different, but I think it's a fair comparison nonetheless. And you can see here in their top 15 holdings that they are, they're a NASDAQ type blend and a Magnificent 7 type blend. They obviously have other stuff in there, but it was a big deal when FEPI came out because they owned the shares as opposed to synthetic cover calls, right? And everybody was just head over heels in love with FEPI because they owned the shares. I do like this part about FEPI on how they weight their funds, based upon the performance of the underlying. So we can see here, right, in their top 15 holdings, how they're weighted since 12/31 24. It may be different next month, right, at the end of January or February possibly. But yeah, so you can see how they've weighted their funds based upon the underlying's performance. And I think that's good. But as you can see in some of these comparisons, it's still not up to par with some of the others. Here's another thing I like about FEPI. Look at their distributions. Very consistent here. The top being, 116 and a bottom being 105, which is here just recently. Very consistent with their distributions, which also is from most covered call funds, particularly in like a high yield space. They're all over the place, right? These are really consistent. So I think for planning purposes, if you're trying to live off dividends like we have been during this semi-retirement phase, during this winter, that does give you some stability, which obviously most covered call funds, particularly in the high yield space, just don't offer. So I do want to do some comparisons here to FEPI, JEPQ, YMAG, and QDTE, okay? So let's do this. Let's go over. Let's start here. Okay, so we can see here in this first comparison to FEPI to QDTE, and we're also going to look at the charts, and I found some interesting things here with the comparisons. So total return, right, what is that? 9% for FEPI since QDTE came out. In the same time frame, QDTE is at 18%. With dividends reinvested, you can see down there at the bottom, 8.69 versus 15%. So we can look at the comparison chart as well. And you can see there's a massive dip here from FEPI that QDTE did not have. Look at that right in there. And I think that was from Intel, possibly, because Intel had some issues. And that could be a potential problem of actually owning the underlying stock versus synthetics that you can get out of or roll or whatever with those options. You just don't have that type of flexibility when you're holding the share. So I do think that's possibly from that Intel issue. And it hasn't recovered. I mean, it has recovered, obviously, but not to the level that QDTE has. Let's go look at FEPI versus YMAG here. So since YMAG came out and FEPI, you can see the differences here. 12% in total return with dividends reinvested, 35% for YMAG. And if you did reinvest the dividend, you're talking 11% to 30%. So YMAG is really outperforming FEPI by a large margin. And you can see that here, the gap between the two charts. And again, that, big drawdown that FEPI had, and then the slower recovery, right, afterwards by looking at the chart here versus YMAG. So right now, QDTE and YMAG have outperformed FEPI. Does that mean they both will for the future? Who knows? But all we have is the data currently. Now, here's something I found interesting. Usually JEPQ lags behind most of the covered call funds because it doesn't pay such a high dividend, and we're talking about JEPQ that gets share price appreciation more than others just because it follows the cues much better than any of the other funds. And we'll show that in the charts here in just a second. So if we look at total returns here, okay, since FEPI came out, JEPQ, and we can see this comparison, total return, FEPI's at 26%. I mean, that's not bad, but JEPQ's at 35%. JEPQ pays, way less of a dividend, but it's still outpacing FEPI in total returns. And when we look at the charts, you're going to see a drastic difference here when we look at the actual charts versus this comparison. So even JEPQ is outperforming FEPI. So that really makes me scratch my head and think, why? Why would I buy FEPI when these three funds that I've shown are outperforming it? Okay, let's go look at some charts here. So here's FEPI. And this isn't, a horrible looking chart. I mean, you can see it's going down, but it's a covered call fund, and that's going to happen, right? You just want to make sure that the dividends are outpacing any kind of share price decline. So there's FEPI. Okay, looking at its chart, and I drew that line there just for visual representation so you can see the trend, and it's below all EMAs, et cetera, et cetera. If we look at YMAG, if you compare these two, looks like YMAG just by the chart is similar, but it's holding its own, I think, better. The falls aren't as drastic. I don't know. They're really similar. Hard to tell there. But if you look at JEPQ, now look at JEPQ. Okay, here's the JEPQ chart versus FEPI. Drastic difference. And you could see the power of the share price appreciation of something like JEPQ, right? That's real share price appreciation if you'd have bought, I don't know, at those lows at 47 or whatever, right? There is some share price appreciation if you bought down here at the lows of FEPI at 44. You're at 48 now. But it's not this, right? So I don't know. I mean, it's still $10, right? 47 to what is it at now? 57. And the low there is 44. It's 4. Yeah, so definitely looking at this, the share price appreciation on JEPQ is just much better. And the overall total returns are shown out. Now, if you look at the QQQ chart, here's the Qs. And we know typically covered call funds aren't going to look like the underlying chart. And I know this is not FEPI's underlying chart, but I think it's a good comparison. So there's the Qs. There's JEPQ, YMAG, and then look at FEPI. Total different look. And then if we pull over here to QDTE, this one, even by looking at the chart, just to my eye, and I know total returns, QDTE is beating FEPI, but, I mean, look, they just now got their low of 38.79. Look at that. You see that here recently, right? Not seeing that here with the Qs. Not seeing that with JEPQ. Not seeing that with YMAG. Not seeing that with FEPI even. So I don't know what this means for QDTE in the future, if they're going to continue, but this chart does not look good, even in comparison, to my eye anyway, to FEPI. Rather interesting. But so for my money, right now, when the markets do correct, I'm still leaning on JEPQ just because when a market's correct, and let's say they drop and excuse me, JEPQ comes down here to, let's say, 47 again, okay? And I start buying in that level, I will feel comfortable when the inevitable happens and the market goes back up. I will be able to catch really good share price appreciation. And if you're trying to live off dividends, right, you can pull those dividends 100% above your cost basis if you choose, and it won't hurt anything. But with this, trying to catch share price appreciation from FEPI doesn't look like that won't be to the level of JEPQ at all, and even to YMAG to a degree. This one here, I'm really surprised at the QDTE chart. I did not expect it to look like this. I don't know what that means. Again, I have no idea what this means for the future for QDTE, but I'm not liking the way this looks in comparison to JEPQ and even YMAG. Food for thought. Please let me know what you think of FEPI. Is it something you still hold? Is it something you're going to hold or buy in the future? Are you happy with it? I'd love to know your thoughts and your opinions on it. Hope you enjoyed it. This is Mike, Tactical Stock Scalper, out.